Oh my goodness, guys. I got my double espresso on deck for this video, and I got to roll my sleeves up for that matter because Tesla reported earnings yesterday, and now this morning, it's about 10 a.m., not even, their stock's up over 17%, which is unbelievable. So, guys, we have to break down the earnings, my thoughts, and of course, the charts here and what I'm looking to do. But first, hit the like button. Do not forget to subscribe and get up to 15 stocks for a moo. I'm telling you guys, this is the best deal right now by far. Check out the link down below or go to stocksurfest.com/moo. Open up your account and fund it with at least $100. That's it. You get 5 stocks and you get a $30 cash bonus, and fund your account with at least $1,000. You get 10 more stocks, and overall your uninvested cash will earn up to 8.1% APY, which, guys, cheers to that, man. That is unbeatable. Check out the link down below again, or go to stocksurfest.com/moo, and let's dive right into the video. Holy smokes. Again, we're up now 17% on Tesla stock, trading at $249 per share after just being literally yesterday at $212 per share on the low of the day. So I think it's up, 18, almost 19% off of that low. That is pretty insane, guys. So Tesla now is completely breaking out on the 1-hour chart, obviously on the 5-day, the intraday, not even worth looking at those. And here on the 4-hour time frame, we are now clearly pushing back towards the highs from the last couple of months, being about 265. We hit that point in the beginning of October, end of September, and about 270, 271. That was the high from the middle of July. That's where it looks like now that we're continuing the trend here. That's where it looks like this wants to go. It's also pushing above both moving averages now, and we can see there could be more juice in this rally. Potentially. Not guaranteed. Obviously, guys, do your own research as always. But, man, we held the uptrend beautifully. We bounced off of that at a higher low. You guys see that right here. Look at these higher lows that have been made all throughout the year. And, again, now we're breaking out of the moving averages, and it looks like we're pushing 260, 270 here on the 4-hour time frame. So before we get too carried away, guys, let's break down the actual earnings. I have a CNBC article here. Much easier to just look through this article very quickly, guys. By the way, run those likes up and check out my email list down below. I'm sending you guys my top 3 stocks every Monday for free. Check it out in the description box. So you can see right here, we are now going to look at their numbers, and the headline says Tesla shares jump on profit beat. Musk's prediction of at least 20% vehicle growth next year. I mean, possible. It's totally possible, but knowing Elon, he always throws lofty goals out there to kind of hype up investors, so I can't take that 100% seriously. You got to take it with a grain of salt, of course. His job literally is to pump up, not in a bad way, but, hype up the company, crush the goals, have the vision. And sometimes the short-term goals don't always hit, but anyway, we'll see. So earnings per share, 72 cents adjusted, by the way, which that beat the 58 cents expected. And revenue, $25.18 billion versus $25.37 billion expected. So they beat earnings per share by 14 cents, but they missed on revenue by about $0.2 billion. Not that crazy, but they did miss. But clearly the stock doesn't care, probably because of Elon Musk's words, the guidance. We'll talk about that. But look, revenue year over year increased by 8% to about, $25.18 billion, but it was roughly, where was it? $23.3 billion last year, and net income rose to about $2.17 billion from $1.85 billion last year. So from 53 cents, excuse me, a share last year to now 62 cents per share. Not bad. Let's see here, guys. Profit margins were bolstered by a $739 million automotive regulatory credit revenue. Okay, we've seen that a lot before. Automotive revenue, which a bulk of their revenue obviously still comes from them selling cars, that increased a whopping 2% year over year. Not much. To $20 billion versus $19.63 billion last year. So not much growth there. And it looks like it's been flat since late 2022. So not much growth there, guys, when it comes to their automotive revenue. But I guess Elon's saying 20% growth in their cars, right? So I guess that is hyping up a lot of investors right now. That are excited that revenue growth in automotive is going to be back, hopefully. Energy generation and storage revenue soared 52%. So there we go with some growth to $2.38 billion. Not bad. So this is the chart here that shows their quarterly revenues by segment, and you guys can see how much revenue has slowed down. It has, right? I mean, look, above my big old head here, actually, if I move this to the left a bit, you guys can see pretty much since 2022, we've been slowing down revenue-wise in the low mid $20 billion range here per quarter, right? Again, this is quarterly. Tesla quarterly revenues by segment, and of course a lot of their revenue comes from automotive, but the other segments have been growing over time, which is good. I mean, that's good news for me, at least in my eyes. I don't know about you, but let's come down here a little bit more. Elon Musk said on the earnings call that his best guess, quote unquote, is that vehicle growth will reach 20% to 30% next year due to lower cost vehicles and the advent of autonomy. Analysts surveyed by FactSet were expecting a total increase in deliveries next year of about 15%. So I guess they're talking about deliveries there, not necessarily automotive revenue growth. But either way, I mean, that's still a very important number to look at. So Elon Musk essentially is looking at 20 to 30% delivery growth, whereas the analysts are looking at 15%. So not nearly as bullish there as Elon Musk, the analysts. And looking at Cybertruck here, the company sold more than 16,000 Cybertrucks in the U.S. in the third quarter, according to estimates. And that is now the third best selling electric vehicle in the United States, behind not only Model 3 and, of course, you guessed it, Model Y, right? So let me see. Anything else worth mentioning? Looks like deliveries increased 6% year over year. They were shy of the analyst estimates. Then the article talks a bit about competition, which I don't want to talk too much about in this video. We all know there's competition in China, rising competition here in the United States. We all know that. We've been known that for years at this point, that competition will eventually come. And that's what we're noticing. And that's why Tesla's growth has slowed down a bit. But ultimately, according to Elon Musk, it's going to come back. What do you guys think? Let me know your thoughts in the comments. I'm very curious overall where your head's at, where you think the stock's going. Are you buying? Are you selling? Personally, I'm not in Tesla stock right now. I'm not in it personally. I was in it, made some money. I'm not in it right now. But yeah, I'm keeping my eyes on it. Let me know your thoughts in the comments down below. Smash the like button. Make sure to subscribe. And shout out to everybody that's been joining the Patreon. I appreciate all of your extra support. As always, on the Patreon, we're building out a portfolio where I'm buying stocks and putting in real money every single week, right? And you guys get to see everything I'm doing in that portfolio, full transparency, trades, performance, all of that. And there's also a Discord. You get my charts and ideas throughout the week, and you get more access to me as well on the Patreon. Link down below in the description box, in the comment section, or just go to StockSurfS.com/Patreon. I'll see you guys on the inside. And with that being said, cheers. I'll catch you guys later.